Hello and welcome to another episode of Last Week in Localization, the show where we talk about the latest from the world of localization, whether that is research, events, or news, or anything else you might want to know or need to know in the area of localization. My name is Sarah Hickey. I'm your host and the VP of Research at Nimdzi Insights. And today I have a very special guest, my colleague Jonathan Otis. Sorry, that was my German coming through.
Good morning or good afternoon, wherever you are.
Good to have you. Jonathan, I feel like we don't see your face enough on all of our Nimdzi channels. So, but you are one of the geniuses working in the background, I think. So maybe introduce yourself briefly in case the people
Sure.
don't know you.
I'm not sure about genius, but I'm definitely working in the background. So I run the M&A practice here at Nimdzi. I've been here about 2.5 years. We've been doing lots of interesting deals and just working with lots of companies, depending on where they are in their life cycle of M&A. I've been doing a lot of growth strategy as well, getting people ready. They might not want to, sell for a couple of years, so they might not be ready to buy something. Mm-hmm. We've got a lot of people here at Nimdzi working with all aspects of growth and strategy with companies, and I kind of handle that corporate development side.
Okay, perfect. I would say you're definitely, well, in my humble opinion, you are the expert when it comes to M&A in the language industry. And so I thought you would be the perfect guest for this show because we've seen so much M&A and investment in the last year. I mean, it's been going on for a while, but especially in the last year, it just seems like it's one after the other. Almost every week there's another piece of news of some kind of M&A deal and some kind of big investment. And we've talked before internally, and you've told me that it's a real seller's market right now. So maybe for those who aren't as versed in this kind of market and in this kind of lingo, can you explain a bit what a seller's market is?
Sure. The rules of supply and demand work across lots of different businesses, including the M&A aspects of globalization and localization. We have seen so much activity that there's less available. Whenever there's something less available, people that are selling can charge more money, they can be in control more. But I think the real reason we're in a seller's market is that the industry is going through a growth and consolidation phase. And the most important part of that is customers. And so customer acquisition has been very difficult over the last 18 months through COVID. Customers were going up and down on their demands. They weren't making a lot of changes. They're just trying to survive. And so, the movement of customers between different LSPs and different service providers, in some respects has been accelerated, especially if you needed something new. But if you didn't, and you were just looking at your traditional needs, people really buckled down and didn't move a lot. So providers always need new customers to grow. They should be growing half through existing customers and half through new customer acquisition. And so M&A is actually really driven, in my mind, tremendously from new customer acquisition. How do you get new customers? The easiest way is sometimes just to buy them. And buying a company in a certain vertical, buying a company with certain customers, or just buying a very good company with lots of nice customers is a great way to grow your business. And so in our market, people want to grow. They want to keep growing. Localization, globalization is a very profitable business. I won't say it's easy to make money, but there is a lot of money to be made. And so the demands are high on the industry, both for companies growing and people coming into the business wanting to invest, PE firms, VCs, and others that want to invest in the space. So all that put together, there's a lot of demand. And when there's a lot of demand, then the sellers are in a better position to sell. They make a little bit more money in the process.
Mm-hmm. Yeah, definitely. And I mean, this is one of the things, something you touched upon there as well. Something we always say at Nimdzi, and it's true, is that our industry, so the language industry, the localization industry, is very resilient. It's very resistant when in times of a crisis, not completely untouched by it. But we've seen this again now during the pandemic, that a lot of the businesses still grew. And like we said before, language services touch all other industries, and there's usually always still a need for communication, no matter what. So it is a very good business to be in.
Mhm.
And like
And
you
we
said,
saw a lot of customers, we saw a lot of LSPs who grew well, but they didn't necessarily grow from customer acquisition. They grew because their customers needed more.
yeah,
Their customers slightly modified their go-to-markets and needed more localization around that. They were in an industry that hiccuped up, during the pandemic. So healthcare, life sciences, e-commerce, all those, were greatly increasing their business, but wasn't necessarily a lot of new customers going into LSPs.
yeah.
And so we see I personally believe that a lot of the acquisition activity is driven by companies who are solidifying their customer acquisition side, and they're getting new customers through acquisition.
Yeah, this is definitely something we've seen. Like you already said, that often one of the easier ways to go into a new market and find the customers there is to just buy a company in that market, whether that's a certain country or a certain vertical. If you want to branch out, I mean, we've seen all the big players do that. And also, I mean, if we look at probably, this is no news anymore at this stage, but still, I think relevant. If we look at the biggest acquisition in the last year, is still definitely RWS and SDL.
Right.
They were, from what I understand, former rivals as well, and I guess that's one way to solve the problem as well, right? To just
That's right.
join forces.
That's right. And when you're very big, it's hard to do that. So there's a lot of top level synergies required for that. But we've seen, that acquisition take place and the integration that follow that. So we've seen, 6 to 8 months now of, integration going on between those companies, and lots of changes in the management, in the direction, in the go-to-market. But, we would assume and expect, the customer services to be number one, and that seems to be moving forward.
Mm-hmm. And how long, in your experience, because I know you consult a lot of businesses around this, you broker those deals as well. How long does it usually take for a deal like that to take place? To find the right partner, because there's so many companies out there. Can it be?
Well, for a seller going to market, they should expect it to take 6 to 12 months to find the right buyer and to get a deal to go through. Most deals take between 6 to 12 months, no matter how they get started. Larger deals can move very fast because once the word gets out, or once people start working on it, it becomes the prime objective. Smaller deals get harder because people are always trying to buy something, with value, and they want to make sure that the value is maintained during the process of buying. So it also depends on where the money's coming from and other things. This is what makes this part of the business so interesting, and I call it so subjective in many respects. Is there's no two deals that are the same. There's no real formula to follow. It's a lot of people have heard me say it's kind of like buying a car. You could walk into a dealer, decide you need a car, walk into a dealership and leave with one in an hour. And another person who decides he needs a new car, takes a year to drive 20 different models and think about it and do a lot of research. And buying and selling companies is very much the same. It's very subjective. It's very personal. Even though it's not from up above, but it's very personal when you actually get into the work. And just like, localization for our customers. I mean, the strength of the customers and the relationships between suppliers and customers is all based on, personal relationships, which is, what drives business and what drives the whole society in many respects.
And is this then also where, you, for example, and others as brokers kind of come into, you're like the matchmakers of the language industry, really, because you know the market and the dynamics, but you also have to know the individual companies properly, right, to allow for this kind of matchmaking. So how do you go about something like that usually when companies?
Well, I personally spend a lot of time, with the sellers, understanding the company, what makes them different, but I also try to spend a fair amount of time with the buyers. I'm always calling around to the different M&A groups, meeting with CEOs, learning what they need, learning about them. and sometimes learning not just at the high level, but in their org. What are their people like? What are they looking for? Um, we it's hard to sell a company because it's hard to get people to buy a company. They want everything perfect, and nothing ever is. So a lot of our job is matchmaking, as you said, but it's also working on the no's and the yeses. Why are you going to buy something? Why aren't you going to buy something? Understanding more about it and trying to understand the strategy behind it, so that everything fits together. And then you can't forget about the fact that buying a company is only one step. Integrating it is another one.
Yeah.
And so we do try to spend time with people on the integration side. Alex Jarvis wrote a great article about integration, how important it is. I mean, a deal isn't successful unless the integration is a success, and it isn't overnight. Integration takes time. Doesn't matter if you're a small company, a large company. It takes time and effort, and people really need to think about that too. And so when we see big companies go together, like RWS and SDL, there's this huge integration period, and it could be a lot of things. And we recently saw TransPerfect buying a big company and saying how they're just going to leave it alone and just let it do its thing. And so those decisions are hard to make, and they take a lot of thought to know how that's going to make sure that everything falls into line.
Yeah, and that's a very good point as well. That it of course goes way beyond the actual just the deal closing, but like you said, if once it closes, it has this decision of whether to merge everything or let them run on their own, continue the brand or not. This has a knock-on effect, of course, on the existing customers, maybe some future customers, the people in the business, maybe the technology that they're using, all these kinds of things. So it really does have a big knock-on effect, and potentially, I guess, there's a lot of change management required as well internally then afterwards to make everything fit. You might have different company cultures as well coming in, right?
And I think these particular items are on the mind of the buyers more than people realize, and probably more than even the sellers realize. And so we spend a lot of time working on that, getting the right information set, doing enough due diligence to make buyers comfortable. And so there's just a tremendous amount of work there.
Yeah, sounds like it. So I just had a question on the tip of my tongue there, but it doesn't matter because I have a lot more, so it's okay. Oh yeah. So when you told me this before, but I don't remember the full list. You were saying that I think there were 3 things you always told me that people are looking for when they're buying a company, and I think it was right. People,
it's an old list, but you're right. Well, they're looking for customers. We talked about customers a bit. They're looking for technology or differentiation. What do they do differently? Why are people buying from them? Do they have an edge on something? Do they have something I might want to sell to my customers? And then very importantly, and sometimes most importantly, is the people. They're looking for good people to come with the acquisition. Where do those people fit in my organization? What can they bring? They especially want to understand the salespeople and the sales team, since customer acquisition is just key to success. And then are you a low-cost operator? Do you use offshore resources? What kind of independent contractors are you using? What is your back office systems? Are you using Plunet? Are you using something else? Are you using just Excel spreadsheets if you're pretty small? I mean, we don't see that much anymore, but we did for a while. They want to understand all that so they know how things are going to integrate. And then that also allows them to figure out where they're going to save money. So if, consolidating back office operations is a huge way to save money and bring another 3, 4, 5 points to the bottom line.
Yeah. And so you were saying earlier, it's it takes a while for someone to be convinced that they want to buy a company because, of course, it's a big investment. And like you said, it needs to be the right fit. At the same time, we were saying that it's a seller's market. So meaning, everyone's looking to buy, I guess, as well right now. So how do, on the one hand, I'm thinking how does someone make themselves very attractive for a buyer to reach out? Or at the same time, how does a buyer how do they make themselves attractive? Just through money? Or is there more? What can, what's the recommendation there?
Well, pretty much first step of buying is the financial side, and having a good financial statement, and being a strong company, having strong margins, having acceptable cost structure, and a bottom line, or EBITDA, as we always talk about. And so companies that are financially strong are going to sell faster, are going to sell easier. The good or the bad of that is very often the financial strength is based on the scale of your organization. So sometimes smaller companies actually have a more difficult time because they have back office costs, accounting costs, HR costs that they can't spread over more people.
Yeah.
So this is where we look to get synergies in putting companies together. But be it as it may, you want your P&L wants to look a certain way, and what it really wants to look at is flat to growing sales. And the faster it grows, the higher your multiple can be. Your gross margin needs to be strong. For a translation company, gross margins are between 50 and 60%. In interpretation, they're between 30 and 40%. And then you look at the cost structure and everything below that, and hopefully you've got 20% left over. If you have a company with 20% EBITDA, on the low end, a 5 times EBITDA multiple will give you, times 20% will give you basically 1 times your revenue for a sales price. And so we work with sellers to understand their financial picture. What should their sale price look like? I spend a lot of time working with potential sellers just on what their value is and what they should expect. But financial strength is always a key. Good or bad, it's always going to be a key, and it's kind of the door opener on how easily you're going to sell.
Makes sense, because like you said, everyone's in it to grow, right? So
that's correct. Yeah. It's a business. It's not a game. It's not a It's not a party.
Not a
it's
charity.
A business. It's a business, and so we're here to make money, and the customers are here to make money, and the buyers absolutely want to make sure that when they buy something, they're going to make money from it after they buy it.
Okay, that actually brings me to 2 more questions. So one, so like you said, we're seeing a lot of this M&A and investment activity, and kind of like, why now? I mean, especially in the last year, there's been so much. Is it a coincidence that it falls into the time where, the pandemic is challenging for some businesses and maybe reshuffling some bits in the industry? Is that a coincidence? Is that related? Or just in general, what other reasons are there from your point of view that right now we're seeing so much investment in M&A?
Yeah, I don't think there's any one reason. An overused adage is, could be considered a perfect storm, where, we have a lot of mature language businesses that whose owners and managers are, nearing retirement age. We've got the pandemic, which accelerated certain needs and also freed up, resources and capital. We've got the capital markets, which our interest rates are super low. So that is driving everybody, and countries are trying to increase investment in their countries. So there's a lot of money available, which I think is probably the biggest reason why you see a lot of activity. And I think it's just if I didn't say this again, and I'm sorry, it's a profitable industry. And so people who make money and are making good money want to make more. They want to grow. People in the industry want to grow. And so that's just natural. And it causes the consolidation that occurs. But in many respects, that just shows the health of the industry. And then we have a lot of new companies, new investors coming in as well. Yeah. While this industry has been very much controlled by the PE firms and the PE industry itself, we have new PE firms entering the language services space all the time. And that's great. So that drives, more demand for companies and more demand.
Yeah, I was going to ask as well what exactly that means, because from what I understand, usually a PE company, they go in to invest, and then, usually after a while, then they want to sell again to get like their money's worth. So ultimately, this drives more M&A again, right? Also with
that's correct.
Maybe down the line, but still. And also, of course, initially when they bring in the investment, that's also money that will be spent again in the language industry and maybe other services or more expansion, more companies being bought. So what is the overall effect, or of more PE companies coming into our space.
Well, I think you did a good overview yourself, so hopefully I won't repeat too much. But
I'm learning.
PE firms invest other people's money. Their job is to grow that money. PE firms invest in every industry, every segment, whether it be real estate, manufacturing, electronics, cars, tech, language services. They like language services because it is service-oriented business. It's not a lot of barriers to entry, not a lot of capital requirements to grow the business. And there's a lot of technology coming in, which is lowering costs, which allows you to make more money as well. And so, but you do see PE firms they're fairly risk averse. That's why they're not called VCs. VCs are the ones who love risk and make huge bets, but get huge returns when they come out. PE firms make big bets, but their job is to make money and make cash for their owners. Every PE firm has an owner of that firm, whether it's the 100 people who invested or a family trust or whatever. Their job is to do that, and so they want to do it with the least amount of risk and the highest return. So they look for industries that are cash positive industries, cash generating industries, and service industries tend to do that. They generate a lot of cash based on human effort and technical effort, and not a lot of capital expenditure. And so, and based on the risk averseness of each individual firm, they're going to enter the market at different levels and buy different kinds of assets. And so we'll see VCs buying. We'll see PE firms buying distressed assets and trying to turn them around and grow them. We'll see ones who are selling very mature assets and selling them to people that are wanting things with a little bit less risk involved. So in addition to, LSPs buying other LSPs, we got PE firms buying them. We have VCs investing in different areas of the marketplace. So it's just those dynamics just keep everything moving.
Yeah, so it's incredibly busy. It's really dynamic right now. And for example, if I'm actually just going to pull this up here in case people haven't seen it, our Nimdzi 100, there's our ranking. And I'm actually already excited now to see what this is going to look like next year, because I feel like we've seen more reshuffling than before. Now, already right now, RWS should be up here where TransPerfect is, or maybe not, because TransPerfect is buying again now as well. So who knows? We don't know yet how that's going to play out. And maybe more companies will also disappear from the middle here. And something we've talked about before is that it's crazy how these are the top 100 positions in the language industry. And up here, we will be close to $1 billion next year in the number one position. And then when we go all the way down, or actually, let's not go all the way down first. We'll look at position number 10. We're already down to around 200 million. Then at position 50, we're at 34 million. And then in the position 100, we're down to 12 million. So it's crazy sometimes to me to think that on the top, we have companies that are really in the billion area, like scraping that, or $500 million, and then it drops all the way down to 12 million in just 100 positions. So I'm wondering though, with all of course, there's a lot more companies. We know that this is maybe about 15 to 20%, depending on how we look at the market, but I'm wondering how this ranking is going to look next year as well. If we have more of this consolidation on the top, will the 100th position be smaller because there's just fewer companies, or this big gap in the middle, or how is that going to play out? You think with companies rolling up, and is the middle going to be bought up?
Well, the numbers are going to grow. So I think that the 100th place won't necessarily fall in size. I'd like to see it go up a little bit as companies are growing and everything. But yes, you're going to get consolidation up above. And that's characteristic of a mature marketplace. Where there's so much consolidation going on. And we're going to see some of these companies disappear, and not necessarily disappear into other LSPs, but they could disappear into other service providers. Other people that use enough of it that they might pick some of these companies up to have them internal for a piece of technology or other thing. The other thing that we don't really show easily enough, is which ones are pure services, which ones are technology.
Yeah.
And so
That's
I know we're doing a lot more work on that internally. Sarah, you've done a great job. Everyone should know Sarah owns this Nimdzi 100. She spends hundreds and hundreds of hours on it.
With the help of the team, though. Yeah.
You do a great job in managing that team, wrangling that team. It's going to consolidate more, but I think the numbers are going to continue to grow as the industry grows, and people have to realize that. And we have, just huge market pressures for more localization work. 5G is going to break this thing wide open as Absolutely. Just, everyone's, the whole bandwidth of the internet goes up, and we just see more and more services and more sales, and e-commerce getting wider and wider, and people using resources all around the world to do their job. And I think the pandemic has really shown that work at home works, but now work at home can go international, and work at home going international requires localization.
Exactly.
And that will just continue to drive the business like crazy.
Yeah, I completely agree. And I like some of the points you made there as well, that on the one hand, we're seeing more consolidation within the industry, so that there's LSPs buying other LSPs, but it's also starting to come in from the outside, and not just in the form of PE firms, but for example, we saw Stratus Video being bought up by AMN Healthcare. So that's a overall healthcare staffing company who've bought Stratus Video, one of the largest interpreting providers in the world. So they're currently not on our ranking. They will be back there through AMN Language Services. And I find it very interesting that we're starting to see it more and more, that people from outside the language industry are getting very interested in the language industry and are seeing the potential in there as well.
A large company's use of language internally can drive the need to have a fairly large department, and that can drive the need for a piece of specific technology. And so you'll see, when I'm selling companies, I have what I call the non-traditional list of potential buyers. So we're calling on the ServiceNows and people providing services, multi-billion-dollar companies whose service levels are so large and so wide and so geographic that they could absorb a $20 million language technology piece internally and just use it internally, because they're driving their 10, 20, $30 billion worth of revenue. And having a $10 million piece of software in there is exactly what they need. And so I spend a fair amount of time looking at non-traditional buyers, talking to non-traditional buyers, CTOs and VPs of engineering on technology, and buying technology out of the space, proven technology that's driven $2, $3, $4, $5 million worth of revenue a year, but can fall inside a company and do a lot more damage.
Yeah, and like you said already as well, we in this list and then just in general in the industry, we've seen a lot more like maybe the traditional LSPs who've added a tech side to their business. And we're also seeing traditional tech companies adding a service side. So there's more and more this like meeting in the middle of service and technology. And we write about this in the Nimdzi 100 a little bit as well, that companies in general, they're branching out a little bit as well. So to become more like these strategic partners for business. So that goes beyond language services. Language services are still at the heart of it, but it goes also beyond that to help their clients grow again, which is always in the end the ultimate goal, like to reach the end users in the different markets so that the business can grow. So that'll be a really interesting space to watch. And something else I always find fascinating, and this might be obvious for some, and again we've written about this, but if we look at the list here, not even all of the big players are competing in exactly the same space. They're all in the language industry. But if we look, for example, Language Line Solutions, about 95% of their revenue is from interpreting services. But TransPerfect and Lionbridge, they're not really involved in interpreting. They have a whole different focus. Then Keywords is all about gaming, really. Appen is mostly about data. Then we have SDI and Ayuno that also since then have merged. They're in the media localization space. So I find it very fascinating that in the language market, there isn't just, it's like you said, it's growing all the time, but also in like different areas so that it allows for a lot of different big players who can dominate different spaces within the language industry. So there isn't just like, technically there's one on top, but there isn't really just one on top, because depending on what you need, there's different ones.
Right. Maybe the best way to say that is, the largest player is $1 billion, but they're $1 billion within a $50 billion market space.
Yeah.
And so you could say, is there any monopoly issues there? Is there consolidation issues there?
Yeah.
Really, there isn't.
Yeah.
There's a huge amount of demand. People should realize half of Nimdzy's customers are the enterprise buyers who buy from all these companies. So we spend a lot of time on the buy side or the buyer's side, working with them. And so we understand that. I think that helps the M&A practice because we understand what the buyers are buying better than some. And so that helps us actually sell companies and match companies better as they look for them.
Yeah.
But understanding the buy side in the buyer objectives, the end user objectives, the enterprise objectives is important. And that's what's really driving the overall business. So when you see an enterprise customer actually buying a language services piece of technology, that's a little bit of what you were talking about. And I think that is super interesting and will continue as well.
Yeah, I find that super fascinating that there's so much coming in also, that it's not just happening in the industry, but that there's so much more coming from outside the industry. I think that's very telling about how active this market is, how much it is growing. And something I pointed out before as well, that to me also, especially in the last year, I find like we've seen a bunch of language services go more mainstream. Before, when I talked to friends of mine about what I'm doing or what we're doing, some of it was very abstract. Like people would get it, but it's like all these language services. Whereas now more people use remote interpreting, more people know what, they use like the streaming platforms with subtitling and dubbing and all this. And these might be easy examples, but still, it's going more mainstream to individuals a bit as well.
And we're going to see the continued effect of technology. So AI has generated MT. MT has gone mainstream. Whether people admit it or not, it's gone mainstream. But there's a lot of other AI technologies and use of AI that's going to come into the language space. That's not necessarily MT itself, and we're going to see that driving the industry more and more. And so technology players are going to play a much more important part of what's going forward, and customers are getting smarter. They're understanding these technologies better. They're driving their suppliers to use them more and more. And while everyone's afraid of costs going down, the total revenue isn't. So while cost per word has a lot of pressure on it, total words is going up so fast that it's just countering
volumes.
That. Volumes and volumes.
Exactly. And it's also, everything has become a bit more, I don't know how to phrase this, but like personal bit through like, brands are also advertising on social media these days to the individual consumers. And, you were mentioning 5G earlier. These days, pretty much everyone has a smartphone. And then once 5G is implemented and we can all stream stuff within seconds or play, mobile video games with a very good connection, that will drive more demand for localization. Again, this is an area where it'll become more about the end user as well, and a little bit more personal, more people have actual contact with language services, which is great, first of all, because of course we all want this access, and breaking down language barriers is what we talk about all the time. But it's also just allowing brands to really reach end users better. And there's so many different languages and millions and billions of people who have very little content for now in their own language, but they're all potential consumers, and that can be reached better. Our Project Underwear shows that, right, as well.
Yep. Lots of research there.
Exactly. So, I mean, I know we already touched upon lots and lots of different topics now, but just in your expert opinion on the M&A and investment front, how do you see the market developing in the next year and in the next 5 years? Sorry, I have to put you on the spot.
Well, I think we're going to see, lots of deals continue through this year, the end of this year and into next year. Driven by all the different things we talked about, just retirements and technology needs and growing. And as long as capital costs stay low, we're going to continue to see lots of investments. I think that we're going to see a resurgence in technology. There's just too much technology being developed to ignore. And, a technology company that can start to show revenue, can start to show traction, is going to become very attractive to others. And so for those companies who are in the technology space or consider themselves a Lang tech company, their job is to get their revenue stream started, put everything in making sure that customers need what they have, want what they have, that their product works well. And I think they're going to get picked up again. While we've seen, I think, a little bit of a downturn in people wanting to buy technology, I think that's going to turn around. And I would say, the rest of this year and next year, you're going to see a lot of technology pieces start to move as people realize their engineering orgs need help. You always need to keep expanding that. You need expertise in those orgs. You need to take proven products and take them to scale. Some people are great at developing them. Some people are great at selling them. Putting those two together is really what our matchmaking is about. Because good salespeople need good products to sell, and they need new products to sell. They need differentiated products to sell. So I think some of the larger orgs, while they poo-poo a lot of $1 million technology buys and things like that, I think you're going to see a lot more of them happening than you realize. And those companies that can push through and start their revenue stream and show that they've got something different and are using technology in a different way, are using much more AI versus other things, or doing MT in a new way, that brings higher quality. You're going to see those companies get bought up, and people that are sticking to traditional methods are going to be scrambling. And as we've got Microsoft and Google and Amazon applying pressure as they bring out new technologies and things on the sides and make it easier and easier for customers to use them instead of LSPs. So the LSPs have to modify themselves to make, go to market easier, user experience better, easier, quicker, higher quality, do things quicker, faster, cheaper. That's the name of the game.
Yeah, definitely not a market where you can just snooze and stand still, because it's just too dynamic.
For sure. For sure.
Okay. I checked and I don't see any comments, but maybe I should have also mentioned that people can post comments and questions directly. I forgot to say that. I'm just not sure, though, if that's also because I'm not working the tech.
Well, hopefully everybody's out on vacation.
Yeah,
enjoying August.
Enjoying some sunshine somewhere. That would be nice. Well, I've asked all of my questions, and I feel like I've learned a lot. It's always great to chat with you, Jo. We never do it.
My pleasure. I always enjoy getting on with you, and I'm happy to do it again anytime.
Awesome. So is there anything, any final words, or have we said it all? I feel like we talked a lot.
I think we've said it all.
Yeah, I think so too. Okay. Well, in that case, thank you so much for joining. I'm going to play my little outro here now. Thank you. Oh, a little bit too early. Sorry, Jo.
All right. Bye, everybody.
Great to have you. Bye.